is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, looking good, Billy Ray, feeling good, Lewis. Well, we're going to go through some charts here this morning. A lot of things are happening, folks. We're having volatility that's just really amazing. I posted a chart here from our good friend Jeff Huge showing you the bear market rally, supposedly, and this may or may not be it. I don't know. All I know is we're seeing some really great volatility. Okay, let's walk through how I handle a certain trade, because I think this is going to be relatively important. Okay, here's where we were. If you'll remember just a few, well, I'm not going to go through all that because you've been through that already. We're not going to spend any time with that. What we're going to do is we're going to look at the chart and let the chart tell us to trade what you see. Okay, now here is the chart of the market we were looking at, which was June gold. Of course, we had to switch to August. Okay, and now what we're doing is we're in August gold at 1831. Okay, we just hit 1871 just a little while ago. Okay, now what I said was when we bought this yesterday, I said raise your stop so that you don't make more than $500. In other words, protect a $500 profit. Well, today we cleared this number right up here, which was 1868. And on my first video last night, I said, I'm getting ready to buy this if it breaks out above 1868. And I threw the video and I kept looking at it, and I realized, Larry, you are not a breakout trader. You just don't do that. So why are you going to do it? So I decided, maybe I better not do that. Well, let me tell you, folks, I got about 7 or 8 emails very, very quickly asking me to explain, what I was doing there. Well, first of all, I trade patterns, folks. This is a breakout. Breakouts are different than a pattern. A pattern, I'm buying at a point D, okay? Or I'm selling at a point D. But when I'm breaking out of this, where do I put my stop? This was the thing that Mark worked with me all the time. He says, where do you put your stop on something like this, Larry? And I said, well, Mark, I don't know. That's why I don't trade it. And he said, well, then stick with what you know. And by golly, that's what I've done. But during one of those emails that I got an email from our good friend, Mr. BV down there in Texas. And he pointed out something to me that when I saw this, and my whole strategy changed. And I'll just show you right now what we're looking at here. We'll get it up here. And because I teach the people, you got to use open interest, especially when you're looking at breakouts. But look at this, folks. Look what's happened in open interest since May the 12th, and you can see the price where we were. There's your 1824 again, and 1825 was the ABCD. But look at the drop in open interest, folks. We went from 580,000 contracts to 506,000. That's short covering, folks. That's not new buying. And so what did I do? I said, by golly, I am getting out of this puppy for 2 reasons. One, the first reason is it was a $4,000 profit in one day, which was really good. Now, I know you might think that's the wrong thing to do, folks, but I had just made some of the best trades I thought that I could possibly make that didn't turn out anywhere near as good as I thought they were going to be. Let me just show you what happened to us in the crude oil, folks. Let's just get this. Most of you were involved with this. We were ahead at one time $5,000, folks. And with the 2 trades that we did, we sold the 382 retracement here this morning that happened in about 10 seconds. In other words, we made a lower low here, and boom, we went up and hit the 382 right here. We had a really close stop on it. But on the trades that we did here, folks, we sold it up here, okay? And then what we did is we had a buy stop in here, so we made 3,000 on that, and then we dropped another 1,000 here. So we ended up $900 ahead on a move where we were ahead by $5,000. Now, that's trading, folks. There's nothing you can do about that. I'm happy that it wasn't a loss, but by golly, there's nothing else you can do about it. And the same thing in the euro. The euro has had a really great move. We were up about $2,000 at one time, and by golly, you'll never guess what happened. The euro starts rallying and continues rallying and rallying and rallying, and by golly, we end up only making $1,000 on that. And that's the way it is, folks. That's what trading is all about. So you can't do anything more or less about that. I have to shake it off because I want to do the best I can for the folks and just show them the patterns. These are not going to work all the time. And we've been on a pretty nice run here recently, and that's going to stop. And there's going to be a period where things are going to get a little rocky. And I know that, and I have to be prepared for it. And how do I prepare myself for it? I try to do it mentally each morning. I only spend 3 minutes in a little meditation that Mark taught me to do years ago. It's basically self-adulation, I guess, but you're a good person, you deserve all this, that kind of stuff. It's a little sequence that I go through. It was partly Neil Walsh of Thinking Like God, was it? Neil Walsh's book, and then also Anthony Robbins was very, very important to do that, because I really believe what I talk about. It says live every day in an attitude of gratitude. I really do, folks, because gosh, have I been blessed. I might have lost a lot of friends and a whole bunch of relatives as you get into your 80s, but gosh, overall my health has been relatively good. I do what I love to do. I made some great friends, a few enemies, but many, many more friends than enemies. So I have a lot to be thankful for. I know you don't want to hear any more of that, so let's move on to the next chart. There's one chart here, folks, that absolutely surprised me here with the stock market being under some pressure. We had a nice rally, but take a look at Dr. Copper, folks. I know Rich Anderson looks at this a great deal. Let me get this up here so we can take a look at it. There we go, right up here. By the way, I did post the information about Tom O'Brien's show that's going to be next Friday, all day with Tom O'Brien. That's got to be worth it, folks. Get a chance if you can get it, because he really knows the stock market really, really good. He does well in futures too, but he really knows stocks. If you're a stock trader, you should really latch on to that, because he does a lot of work. He's been doing this for a long time, and he's very good at what he does. Now here is the copper. Now what we've done now, you can see we had this huge move today when gold took off for its $40 run from the low that we made yesterday. And now that comes in just about at the 61% retracement. You can see the ABCD pattern there. Whether that'll stop it or not, I don't know. But with that big a range like that, I can highly suspect that it's probably going to go, a lot higher. So that's one that I have on my watch list to be paying very, very close attention to. And there's another another market out here, folks, that is the gift that keeps. Oh, by the way, I have to show you the other reason why I got out of the gold. One of the folks from the 24/7 sent out this chart here. On the gold, you can see here we were buying it down there on the left here, down around 1831, and you can see the ABCD up there. The high was I think 1873 today. So anyway, that's what we're looking at. Let's take a break here. 877-927-6648. We'll be right back.
Of booming inflation, where your purchasing power is eroded, there's no better place to protect your hard-earned money than in gold. Vista Gold's flagship asset is the Mount Todd Gold Project in the Northern Territory of Australia. This is Australia's largest undeveloped gold project. We're talking a world-class gold project in a Tier 1 mining district. This is a large-scale, low-cost project with significant existing infrastructure in a politically safe and friendly mining jurisdiction. Vista Gold just completed the Mount Todd feasibility study, which resulted in a 7 million ounce gold reserve and a 16-year mine life. All of this, combined with the approvals of all major operational as well as environmental permits. This distinguishes Mount Todd as an attractive, de-risk partner ready development stage gold project. Vista Gold trades on the New York Stock Exchange under the symbol VGZ.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, we're back, folks, and I wanted to mention that our guest today at the break will be Stan Harley, the Harley Stock Market Letter. He's got some great charts based on the cycle work that he does, and he's alerting us to be very careful of left translation here, which is going to be really interesting to look at. Now, bear with me one second. I have to do something technically. I have to move a stop on something here. Hold on one second. We'll get this up here. So we'll be able to look at this. And if you have any questions, it's 877-927-6648, and we'll be happy to answer them if we possibly can. Someone yesterday, when Rich Anderson was on the program yesterday, after he was off, he called me and reminded me of the time we were in Acapulco, Mexico, with Mark Douglas. Mark was giving a speech down there, and I was giving a small speech, and this was back in 1980. God, it must have been 1995. Yeah, it must have been 1995, but just about 28 years ago. And Rich was going to dinner with a young man, and we were invited to go with us, but Mark wanted to go home because I don't remember why he had to be back in Chicago, because he hadn't moved here yet. He moved here in '96. So I said, yeah, I'll take him to the airport. And since I was going that way, I didn't care for all the hullabaloo that was going on. So I just went on home. Well, the fellow that Rich had lunch with or dinner with that night was none other than Jamie Dimon, believe it or not. When Rich told me that last night, I said, oh, my God, I remember that. You know, of course, he didn't have white hair at the time, but anyway, it was very, very interesting. One other thing that what I'm doing, folks, is I'm getting the charts ready for Stan Harley, because I don't want to be able to lose any time while I'm doing. I'm all done here. Just I need 1 second more. Oh, we got a caller on the line. Yes, sir. What can I help you with?
Good morning, Larry. It's John from Philly calling.
Yes, sir. I recognize your voice. How are you, my friend?
I'm doing very well, thank you. Larry, I wanted, before you have your guest on in 10 minutes, wanted to ask you further follow-up questions on COMEX Gold, if you please.
Sure, go right ahead.
Leaving aside your day-to-day trading tactics, whether it be buying yesterday and exiting this morning, wanted to ask you about the daily chart. Perhaps you could pull that up.
Sure.
First, an observation. It was back on Monday, the 16th of May. Gold made that low. The spot gold at the time, that was June gold, 1785. We rallied 6 trading days. I think the rally from low to high was $85. We have surged off of yesterday's low, so this is frankly day one of the rally, day 1.5. Question. Why, no, not why, would you suspect that this rally, given that sharp move starting yesterday, would also likely to be $85 or more and last up to 6 days worth? That's my question.
John, it certainly could. The only thing that I'm looking at was the open interest. I posted that into the room, the fact that we've gone from 580,000 contracts over 3 weeks down to 506,000 contracts. That's shorts leaving the market, John. And by golly, I'll tell you, that's not a bullish sign. You need players coming in, and there should be big increases in open interest.
So is it fair to say that in thinking about possibly an $85 rally lasting up to 6 days or something, in other words, a good move for multiple days, you're saying it's unlikely because of what you're seeing in the open interest? Is that the overriding thought here?
That's my overriding thought. But today, if the open interest increases dramatically, like 5, 10, 15,000 contracts in the gold, then I'll say, yep, I'm wrong. And, I'll look to get back in again. The second reason is, John, I just screwed up a fabulous trade in crude oil where I had a $5,000 profit. I ended up with $850. I beat my head on the desk so hard today, I got a bruise on the top of my forehead. If you look really closely, you could probably see it. But when I see that happen, I said, well, shucks, I've made $4,000 in the gold, so I'm going to just book it just because of the open interest and the fact that I had that situation happening. And while it might be the wrong way to think about it, but I have people here that watch what I do and trade what I do, and I don't want them to go through the frustrations that I have to go through, even though most of them still do. Do you understand where I'm coming from, my friend?
Larry, I just want to interject for 1 minute to your listening audience. This little discussion on your part is it's fabulous, real-time ability to listen to a trader's psyche. Of course, what you're dealing with today on gold and oil is something each and every one of us deals with from time to time. Not necessarily every day, of course, but you trade long enough, you're going to have those sorts of events. What I just want to say is thank you for just sharing, honestly, the thoughts percolating in your mind. And as you have learned, and you learned this 50 years ago, and I only learned it 20 years ago, but it's that sort of challenges to one's psyche that we have to work on and be very vigilant and disciplined day to day to day to say when that hits us, hits any one of us individually. If we want to succeed, we have to do our very best to recognize we're dealing with that challenge, set it aside, and let it go, move on. So this little discussion, hearing your thoughts, it's just fabulous to be able to hear that, Larry, and I'm indebted to you for doing this day to day, week to week. So thanks so much, not only for the goal thought, but just being able to hear you talk through, your thoughts as you trade day to day. That's just terrific.
Yeah. The folks that are listening, John, they should listen to on the 10th of a week from Friday when Tom O'Brien's, you're going to have him for 7 hours, and he'll go through the same types of things. He goes through and he is a very good trader, as most of you know, and he certainly knows stocks as good as anyone. So you'll get that type of information from Tom, as he goes through and watches the trades that he sets up, because those are the things that that make you it's basically what I look at is the risk control. That's the main thing. The second thing on the gold, if the gold would reverse here, and I gave all of it back but $500, that would bother me. Whether if I could, you know what I mean. So then when tomorrow I'll pay up for it. Yeah, tomorrow I might pay up for it.
Indeed. Thank you for your time here, Larry, and thanks in advance for having your guest on in 4 minutes' time.
All right, Mr. Z.
Once again, thanks again. I'll sign off now.
You bet. Thank you very much. Mr. Z, folks, of Philly. He's one of the folks in the Tiger Den. We'll be right back with Stan Harley, folks. 877-927-6648.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
TFNN has just launched their new trading room, the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. And now they are expanding their reach with the Tiger's Den. Available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. In the Tiger's Den, you can look over the shoulders of Tom O'Brien and the other TFNN hosts while they analyze charts during their live Tiger TV programs, and join an interactive trading community with hundreds of members exchanging ideas. Interact with other tigers and tigresses as they share trading ideas, news analysis, and discuss the market action all trading day, even at night and on the weekends. The Tiger's Den at Discord is accessible on mobile or tablets as well, so it's always at your reach. To sign up today and become a part of this educational community of traders, just visit the front page of TFNN.com.
Tom O'Brien has just announced a live Timing the Trade webinar Friday, June 10th from 9 a.m. until 2 p.m. Eastern Time. Join Tom O'Brien for 5 hours of live education as he teaches you his trading methodology right from his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System. In this live webinar, Tom O'Brien will be teaching you his entire trading system, including quality volume, ABC structures, Fibonacci confluence zones, cause and effect, swing points, and more. We will be limiting this class to 40 attendees, so please do not delay and reserve your seat today for this special live event with Tom O'Brien. All attendees will also receive a physical copy of his book, The Art of Timing the Trade, an $88 value, mailed to you, along with a free month of his daily newsletter, Market Insights, a $169 value. For all the details and to reserve your seat today, visit the front page of TFNN.com. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Okay, we're back, folks, and I believe we have Stan Harley, the Harley Stock Market Letter, on the line. Stan, are you there?
I am indeed. Larry, how are you doing?
Just living the dream, baby, on the green side of the grass, loving this volatility.
Hey.
I look at crude oil, it moves $5,000 like a blink of an eye. Stan, I have a question. You got this monthly points here to January top of this year, which we talked about several weeks ago, of course. You want to tell the folks what you're looking at here? You've got some great charts here, by the way, so let's start with this one.
Absolutely, Larry. This first chart looks at the Dow Jones Industrials going back about 125, 130 years. And what I've done here with blue vertical lines is I've highlighted all of the major peaks from September 1929 all the way through the present. And I've got the dates across the top, some numbers underneath the dates, which represent row numbers in my spreadsheet. And then the third row there are Fibonacci relationships. Mm-hmm. And what I have found when I plug this into a spreadsheet and do a mathematical analysis called regression analysis, which finds the best mathematical fit to the data series, all of these Fibonacci ratios line up exceptionally well in defining all of the major peaks. And when I exclude the last data point, they all point to January 2022 for the next major pivotal turn. And lo and behold, the Dow, the S&P, and the New York Composite topped in January of 2022. So what does that say? That is telling me that we've seen a major market peak.
Yeah, boy, it's certainly acting like it when we see this volatility. My gosh, the Dow up 1,000, down 1,000. My goodness, it's just like pork bellies of the old days. Now, the next one is the S&P on the monthly, and that is pretty much the same thing, only on a shorter time frame. Is that basically what? Okay.
Yes. So instead of going back 130 years, I took this back about 60, 70 years.
Okay.
And this is a log chart. Like the prior chart, which was also a log, that last chart was a log chart of the Dow. This is a log chart of the S&P. Mm-hmm. And what I've done here is I've marked all of the major peaks since 1966 and plugged all those data points into a spreadsheet. And I find a recurring cycle that fluctuates between about 76 months on the low side, maybe 92, 93 months on the high side. But the regression modeling computes a cycle of exactly 84 months. 84 months is equivalent to 7 years. I call this the 7-year cycle. And if I exclude the last data point over there on the right, the January 2022 period, plug in all of those dates, do the computation to compute when the next recurrence in this pattern should be, it says January 2022. And lo and behold, the Dow, the S&P 500 topped in January 2022, right on schedule with zero variance in the computation. Wow. So we've got a long-term chart from 130 years ago pointing to January 2022. We have a 7-year cycle that encompasses 70 years worth of data that also says January 2022. So that tells me, Larry, you and I and all the viewers need to clean off our glasses here and pay very, very close attention to what's going on here, because we might very well have a major market peak on our hands.
Well, that's when you hear Jamie Dimon come on and said there's a hurricane coming. When you hear the guy, major bank in the United States, the biggest bank we have, gives a warning like that right on the TV. I mean, I was actually shocked to hear him use that kind of, language, actually. But when you're making $55 million a year as a CEO, it doesn't make a whole lot of difference, I guess, right, Stan?
Well, no, I think he calls the data as he sees it.
Oh, sure, yeah.
He's looking more at economic fundamentals of the economy. You and I and the guests on the station here are more interested in what happens on Wall Street. But the evidence so far is the cases, the technical analysis, certainly from the things that I've looked at and shared here with you on the air with the viewers, the case is very, very compelling for a major market peak having just occurred.
Well, it's certainly having a lot of volatility. You know, though, Stan, it's held up extremely well considering all the news, from the high in January to the low we made on May 20th. I mean, it was a very orderly correction, for heaven's sakes. I mean, it fulfilled just about all the technical things a person would ask for. And then, of course, it had a pretty good rally. So there's some cases that think that maybe this bull market is still intact. Now, I know you've been pretty accurate about this, but there are still a few people that think that there's a possibility that this market could still go to a new high. Is that a possibility, Stan?
Is it a possibility? Yes, but I
Improbable.
would say not likely.
Okay.
Why? Because that 7-year cycle would have to stretch, oh my gosh, probably close to 3 standard deviations. Doesn't mean it can't happen, but I would say not likely, but could it happen? Yes. Cycles contract and expand. They're not fixed beat oscillators. That's why we have to use mathematical tools to assess the measurement of central tendency, and then we can compute the variance, and the square root of which is called standard deviation. We can do all of those things, and that's the very best as mathematicians, as data scientists, as traders and investors that we can do.
Okay. And I have a question. This is from myself, and that is, do you look at the other markets that are financially oriented, like the bonds are like 6 times or more bigger than the stock markets? Do you follow what's happening to the bond market, especially the 30-year Treasury bond, the fact that there's so much weakness is coming into it?
Well, I do, and I do have a couple of slides on that. Perhaps we could defer that question.
Sure. Okay, great.
For the moment.
Yeah.
Because I do have some slides on that. The next chart, I think, which will explain the recent robust action in the market, is this one. This is a weekly chart of the S&P 500 going back about 5 years. And what I've done here with purple lines is marked the significant troughs in the market over the last 5 years. And they vary between, say 31 weeks on the low side to as much as 49 weeks on the high side. But they all are part and parcel of the exact same cycle. I call this the primary cycle. And in doing the computations going back years, I find that the central tendency of the data series works out to be exactly 34.0000 weeks, or 8 months.
Okay.
Both of those numbers your viewers may recognize as Fibonacci numbers. But this is the dominant intermediate cycle in the stock market. So why are we getting strength off the May 20th low? Well, I can explain that. It's because we saw a trough in the most recent 34-week cycle. That's why the market's rallying so strongly.
Wow.
Are we going to go back to new highs? I never say never in this business, but methinks not. One very, very important aspect to take note of, a phenomenon with market cycles. In a bull market environment, we tend to have what's called right translation. What does that mean? That means the crest or the high point occurs to the right.
Yeah, that's really important.
Of the cycle. Yeah. And that's what we saw on the way up.
Yeah. We have to pay a few bills, Stan.
Translation on the way up.
We're going to pay a few bills. Be right back with Stan Harley. Okay, Stan? We'll talk about mortgages.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Okay, we're back, folks. Speaking with Stan Harley, the Harley Stock Market Letter. Stan, I posted your mortgage chart up here. You want to tell the folks what we're looking at here?
Yes. Just before we broke for the commercial break, I noticed the first slide I had up seemed to be frozen. So I don't know if it's a problem on your end or my end.
It was my end. It was my end, but it's okay now. We've got the mortgage chart up. It should be okay.
Oh, okay. Well, before addressing that, I was just going to say a few words briefly, and I know we're time limited. In the current 34-week cycle, I expect it to contract to about 21 weeks, pointing to a potential low in the mid-October timeframe. And I will be looking for left translation in this current cycle. Okay. What does that mean? The peak, the crest, should occur to the left of the midpoint, somewhere around the 1/4 length of the cycle, which would suggest about 4 to as much as 5 weeks of upside off the May 20th low at the extreme, and then we head south from there.
That was the best thing of the Hearst book that I think I learned, was that left translation and right translation. That made a lot of sense, and I've seen it through the years. So
actually, Larry, no, Hearst did not discuss, and I'm not sure he was aware of it, left and right translation. I actually learned the concept from Walter Brezer.
You know what? Gosh, you're absolutely. The reason why I'm in Tucson was because of Walt. I used to come over here and visit, he and Teresa, and she's still living here, and Jerome lives here now too.
Jerome's there too.
I used to come over here all the time, and that's exactly right. It was Walt that did that, and it wasn't Jim Hearst. You're absolutely right. Thanks for bringing that to my attention.
Yeah, absolutely. Now the mortgage chart. The 30-year mortgage, this goes back about 25 years, and we are north of 5 right now. Boy, interest rates have really, really spiked. I'm looking for some back and fill around the high end of late 2018. So that suggests we could pull back a little bit. But the low rates that we saw a year ago, I think, are history. I don't think we're going to see them again for a very, very long time.
Mm-hmm. Well, that should affect the real estate market then, shouldn't it, with that kind of...
Absolutely. Next chart we brought here is the Case-Shiller Index. This data was the latest data for March was just released 2 days ago on Tuesday. And this is a national index reflecting all of the home prices all around the United States. And it is going pure vertical, like soybeans. It's in nutsy cuckoo land. I've never seen a rate of ascent like this.
Yeah, it's really... Are you seeing that in the East too, besides California?
All across the country, yes.
Yeah.
But my work for a long time, for years, I've done a detailed cyclical analysis of the Case-Shiller data series, has pointed to November 2022 for a high, and I'm standing by that. So I think we have a few more months of upside. The last slide today can tell us a lot about that.
Okay.
The last slide we have here, this is a measure of price velocity across 3 time frames, 8 months, 16 months, and 32 months. It's a look back. And what I do is I calculate the rate of change and plot all 3 on the same graph. And what is happening here is very, very interesting. The 8-month peaked out several months ago. It pulled back. It formed a low last month. Now it's starting to move up again, and it's developing what I believe it will be, ultimately will be a divergent structure, with the 16-month heading higher. The 8-month will put in a slightly lower high. I think that's coming in a few months, and then turn down, and that will be the top. And I expect that to come here before this year is out.
Okay, very, very interesting. Wow, that's really. I have very little experience in real estate. I have a couple homes, but those were for living. I never did any speculation, and I lived, in Westlake Village, where that was one of the best places to live. Well, you lived there too, so
I lived there too.
Yeah.
California. Yeah.
So yeah, it was a great. I actually bought my first house before there was water in the lake, Stan. 1965. Unbelievable. Anyway, let's ask you one other question that someone's brought up, and that was about the regression. The question that this is a person from Oklahoma, has asked, what does regression mean when you were talking about regression analysis?
That is a mathematical technique that statisticians employ. If we've got a data series that kind of jumps around, and you want to find the best mathematical fit to that data series, you perform what's called a regression analysis. It could be a linear regression. In that case, you'd have a straight line. It could be curvilinear. You could have 2, 3, hundreds, even thousands of variables. I didn't learn about regression analysis until I was in graduate school, and then we did a lot of it. With hundreds and hundreds of variables. But essentially, the short answer to the question is it's a mathematical technique that finds the best fit to the data series. And then one can also compute the variance or the standard deviation of all those data points.
Wow, that's
great.
Great.
And then equally important, if not more importantly, we can then take that equation and use it as a forward predictive tool to what is likely to happen in the future.
Wow, that's good. Stan, I want to thank you for being on the air today, and tell the folks how, if they'd like to see a sample of your letter, how they could get it.
They can log on to my website, harleymarketletter.com. My contact info is there. They're welcome to get in touch with me, Larry.
Listen, thank you so much. We'll have you on again shortly, but thank you for the great information, and we really appreciate it. And stay safe back there, my friend. It's a jungle out there.
It is indeed. Thank you. Thank you. My pleasure.
Okay. Stan Harley, folks, the Harley Stock Market Letter, always fun to talk to, and he certainly does a great deal of work. I have to show you a chart that I was following just before we came on the air, because the volatility that we've been having this morning here in the crude oil. Let me get this up here just to show you. I'm going to walk through the sequence here because it was that interesting to me to see it happening here, and we'll see it right there. There is there's what we had. We had this beautiful 1-3-5 pattern here. Look at this, folks. It was just absolutely perfect. And remember, we moved $5,000 this morning. We went from 111 to 116 and change. That's $5,000. A perfect ABCD down, up $5,000 at 135, and it dropped $2,000 in a heartbeat. I mean, it was just in two time frames. I mean, it was just unbelievable how quickly, the market was moving. And I have to show you the update of this because that's what really surprised me. Oh, here it is right here. This is what I just did this right before Stan left the show here. And that is, take a look at this on the crude oil now. This is just a 15-minute chart. We dropped $2,000, stopped right exactly at the 382 retracement, and then rallied another $2,500. Holy moly guacamole, folks. This is major, major stuff that's going on in here. So you got to pay close attention to this stuff. This is not for kids. This is big time stuff. Well, we got gold right near the old high again up here around 1873. I said goodbye to it at 1871. I was thankful to get that much out of it. Maybe it goes to 1950 today, that I don't know. We're going to take a break, folks. 877-927-6648.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
Okay, we're back, folks. I wanted to bring to your attention one of the things that we were watching. We were talking about these grain markets. I did a lot of work on these over the past week, this week, and we're continuing to do it, but we've got some ideas on the wheat, where we think that's going to go. But I did want to bring the attention to you about the soybean oil. Now, soybean oil is also used for energy, folks, because it's a vegetable oil. I don't know exactly how that works, but Rich Anderson explained to me once. It was still over my head, but you can see we have a really nice cycle lows coming in, just about what we hit yesterday. We've had a little bit of a rally from that level, so it's important that it holds near that level, and then it will be pretty good. Again, I want to remind the folks that tomorrow our guest is going to be Shane Smolian, the wolftrader.com, and he is doing incredibly well with his new venture with his automatic trading program. Maybe he'll spend some time talking about it, but it's purely astrological, and it's really quite cool to watch how it goes. Anyway, let's. I wanted to thank Mr. BV down there in Texas to show us that chart on the open interest in the gold, because if the open interest drops today, folks, with the market going up like that, that means that we're probably going to be looking at something that is going to be pretty sinister to the downside. I know we're right on the highs right now, up $25, but things can change in a heartbeat. As you know, look at the S&P, folks. We were at 4072 when we came on the air. We've rallied, how many, 50 handles? More than that, 60 handles to get up to 4130. So these markets move very, very dramatically when they move, and that's why you have to use stop protection. It's not about how much money you make, folks. It's about how much money you don't lose. That's the real key, to paying attention to what you're doing when you're trading. Focus on the risk. The risk is where the real value lies in your trading. So that's what we're paying close attention to these days. Regarding the euro trade that we had on, folks, we added a contract today, got stopped out of both of them. We ended up making just a little over $1,000. We lost $40 on the first one and made $1,500 on the second. So that's what we're looking at. Live every day in an attitude of gratitude, and may God bless.
Building wealth trading